I'm Tara Joseph here with Peter Thal-Larsen of Breaking Views to get an idea of the key events in Asia in the coming week. And Peter, everyone wants to know how slow it's going to go in China. We've got China commodities data, which will be interesting, as well as the latest news on foreign direct investment. Is it going to be ugly?
It looks like it's getting uglier. I mean, I think you have to put it into context. I mean, we're talking about, still talking about 7.5% growth probably in China this year. It's the kind of thing that the rest of the world would kill for.
Admiration.
Yes, exactly.
Desire.
But it's getting slower, and clearly the impact is coming through from the US and from the Eurozone. And this is the thing that the world is really watching now. Now that the Eurozone seems to have kind of backed away from the precipice again, people are suddenly no longer interested in the sort of finer points of Spanish regions or Greek politics. They're really focusing on what's happening in China and whether the leadership transition and kind of the responses that could be made there will have an impact on Chinese growth.
Commodities in particular, though, are we reaching a precipice, a cliff, as you mentioned? Could this data show something like that?
Well, I think in the short term, a couple of things are going on. Clearly, there's a slowdown, and that's partly just demand for Chinese exports, which means China has less demand for commodities. That means also that a lot of people who were sort of investing on the basis of continued growth, like we've seen in the past years, are shelving investment projects. So there's a bit of a cycle going on there. But long term, I think you have to say that the prospects are still reasonably healthy for commodities.
Even though still there's a bit of gloom sort of leaking out into the rest of the Asia region. We have the Q3 sentiment survey in terms of the corporate feeling. Do you think we're going to start to feel a little bit uncomfortable and worried?
I think we are, yes. I mean, I think it really all ties into the same things. It's partly the China effect. It's partly also the uncertainty over the Eurozone.
Double whammy, basically.
Yeah, exactly. And it's all they're all interconnected. We've seen, for instance, in Korea, we've seen exports slowing down quite slowly. So I imagine this is all feeding through into companies. I imagine that they will be feeling less confident about things. I imagine they'll be putting investments on hold until it becomes a bit clearer which direction the world is heading.
On top of the economic gloom, we've got this growing dispute between China and Japan over islands in the East Asia Sea. Japan trade data coming up. There's $350 billion worth of trade every year between these two countries, China and Japan. Are we going to see a trend of that trade starting to fall?
I don't think so. I think if we did, that would be a very serious problem. So far, the financial world seems to have basically ignored what's happening over these islands. So there's a bit of back and forth, but the markets really haven't reacted to it at all. And when you look at the financial and economic linkages between Japan and China, they're still incredibly strong. Japan's a very big investor in China, big manufacturer in China. China is buying a lot of Japanese debt. So I think if there were any sign that kind of dispute was spilling over into the economic or financial sphere, it would be very worrying indeed. I would be very surprised, though, if there was.
Separating economy and politics, I wonder how long that can last.
Well, we'll have to see.